Okay, folks, welcome to the member stock pick request video. This is where we review the stock symbols that our members are watching, and they would like for me to review their charts on video. So, members, stay tuned for the market wrap. I'm going to segue right into that as soon as I'm done with the member stock pick requests. If you're not currently a member and you would like to get our future videos as well as our best stock picks each week, just enter your email address on our website. We hate spam too. You will not be spammed. So let's get to it. The first stock pick up is for Henry. Henry wants to review GDX. GDX is a position which we just closed out yesterday. We booked profits on GDX as we hit this resistance level. It pierced the resistance level. We saw it back off of that level. We booked profits. So what I'm looking for here now on GDX is for it to hold the $20 per share level. You can see that we retested it, it held, and it rallied off of the support level. Now it's got to spend another day or so retesting the support level, build a base, and then we could look to possibly get back long again. Now, overall, the chart looks good. I don't need to go to a weekly chart. I know the ETF is in a downtrend, but when you take a look at the daily chart, you have a great double bottom setup or a W formation, a higher low, prior low 1634, new low 1697. Here's our pivot point at 20.29. So as long as the support level at $20 per share holds, GDX should look good as a long. I would not short it. And we do need to keep an eye on the dollar when we're trading these dollar-sensitive names. So GDX is a hold and a watch right now, potential long. Okay, 3D Systems. This is for fellow member Chuck. We closed out a short position today. We made a nice tidy profit after the stock had broken out, rolled back over, and fell back into a trading range. That's called a breakout point failure, and I love to short breakout point failures due to the fact that the probability of the stock coming back down and retesting prior support is very, very high. And the probability of it breaking down below that prior support level is high as well. So why did I close out the trade? The reason is that we found support today and rallied off of 29.26. The Russell 2000 did the same. It bounced. So I didn't want to get squeezed into the close. We set our stop loss. We got taken out by the market. And that's the way it goes. So it did close below a key support level. So while, yes, we did rally, we failed to close above key support, and let's call it $30 per share. So I wouldn't be a bit surprised to see a continuation breakdown. I may just short the stock once again, because if we break below 29.26, we're probably coming all the way down to, at a minimum, 27.46, which marks the lows seen back in December, if not the lower band of the declining downtrend channel. Now, as a long, the stock needs to break out above this prior support level, and rather than just give up and roll back over, it's got to trade above this level, 3-day rule in effect. My members know what that is. And then after that 3-day rule is successfully passed and it begins to break out, we can look to add to a long position on a breakout above 33.18. But as it stands right now, the path of least resistance remains down, and I think that we're probably going to see a continuation pullback on 3D Systems in the short term. They report earnings on the 26th of February. Note the head and shoulder setup on the slow Stokes. I pointed this out to members the other day. We have left shoulder, head, right shoulder. It broke the neckline today. Not a good sign. AGN, Allergan, weekly chart. This is a stock that remains in a long-term uptrend. It consolidated nicely along the, let's call it 210 level, and it has now successfully broken out. Now, what concerns me about this breakout is twofold. We have the stock now trading off the highs of the week, and also, when you take a look at the ultimate oscillator, we're putting in lower highs despite the fact that we are breaking out. That's a divergence. Now, we could chalk it up to the skewing of the oscillator due to the fact that we were in a consolidation, which happens. but it really should have responded to this breakout, and it hasn't. RSI is still trending higher, which is good. So while the stock is certainly not as short, it's a stock that really needs to hold. This is a daily chart now. That really needs to hold the 214.78 level. And hopefully by Friday, it rallies back to close near the highs of the week. And if it does so, it's a long. And by no stretch of the imagination is the stock a short. The only time it would be a short, and this is a weekly chart again, is if we break down and close below this prior resistance level, which should now act as support. And it did for several weeks. But if we fail and break back down into this channel, then you could short it down to this lower band and possibly even lower if it fails to hold. But the path of least resistance remains higher. I would stay long. UNG, a very powerful day today. We had a breakout on the 13th, a continuation move higher on Wednesday on big volume. This is not a short squeeze. This is accumulation. Would I go chasing it here? No way. We are right at resistance. My guess is that let's go to a 30-minute chart. My guess is that at best we're going to fill this gap here, which formed on the 22nd after this gap down. And that's only if we get through 1669, which marked resistance back on the 22nd. So where would I get long of UNG if I was so inclined? I would need to see at least a 50% retracement of this move. Need to see some strong bottoming action, some support. At the very least, that's what I would need to see. At best, I would like to see a filling of the gap, which formed this morning. Now you have the 50-period moving average, which is going to cross above the 200-period moving average on UNG, a very bullish event. So you may just see a move higher to fill this gap first and then a pullback. But I would not chase it. RSI intraday basis is above 82.3. That's UNG. Okay, EGO, Eldorado Gold. This is a daily chart. We are in a triangle formation, and we're respecting this lower band of this very, very brief short-term uptrend line. Now, I wouldn't touch Eldorado Gold unless it did one of two things. A, pulled back to retest this lower band here in solid blue annotation, or B, rallied and closed above this upper band of the triangle formation. And it needs to trade there for 3 consecutive days. It needs to pass my 3-day rule, and then I would give the green light to okaying a buy to the long side. As it stands right now, there's just not enough reward for the risk that I'm looking to take on. I need to see it either A, show strength, or B, pull back and give me an area where I know I can put my stop loss just below so I can keep my loss small and maximize my upside potential. So EGO is a watch only. I would not buy it right now. Next stock up is Exact Sciences Corp, EXAS. This is an interesting chart. Definitely in an uptrend. We had a nice little double bottom setup at the 24.85 level. We rallied up to 29.03, pulled back, retested the 50-day moving average. We have a higher low at 25.57, rallied off of that level. We attempted a breakout above 29.03, which is the pivot point of this W formation, and it failed and pulled back. So today, a good day, up almost 2% on the day. We need to see a breakout and a close above 29.60 before I would touch the stock. On a weekly basis, it's a real pretty chart. Remains in an uptrend. Certainly not a short. I think it's poised for a breakout and a move higher. So just to recap, where would I buy EXAS? I would buy it on a breakout above recent highs and a close above. That's what's so critical. Most people don't appreciate how important it is how a stock closes. Not where it trades intraday, but where it closes that matters. So we need to see a breakout and a close above 29.60, as I mentioned on the daily chart. And that's only an area where I would begin accumulation. I would look to add on a breakout and a close above 29.97. Now, if the stock pulls back and retests this lower support level at 25.11, I would look to add there with the stop loss just below. So EXAS looks promising. The only thing I will mention that's concerning, and it could be just because the stock is in such a long consolidation, is that the stoc RSI is really breaking down. And you're seeing some real choppy action on the MACD. So I'm not going to be a bit surprised to see a pullback before we get a breakout on the stock. So that's the game plan. You could either buy it on strength or wait for that pullback and buy it then. Either way, you want to use a very, very strict buy discipline. Build your position in increments. Do not get aggressive and buy all at once. STWD. This is probably going to be the favorite chart of the day for the member stock pick request. A very, very good chart. This is a weekly chart. Starwood is a REIT. It pays a dividend. And with yields declining, there will be a rush for dividend, a rush for yield. So this weekly chart, you could see that we are breaking out above this key resistance level. The oscillators have already broken out. The RSI, it broke out, pulled back, retested its breakout point, and is now proceeded higher. So you have an oscillator leading price performance. On the weekly chart, you also see an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline of which we are breaking out above right now. So if by Friday we appear poised to close above this resistance level, green light to buy Starwood. Ultimate oscillator pulled back, making higher lows. A very, very good sign. Slow Stokes looping back up. Looks good on a weekly chart. I think it's a buy. Let's check out the daily chart. Great bottoming tails. A bullish hammer formation, a key reversal. I like the stock. If I get involved with STWD, I will be sending out an alert to members. Okay, USG. This is a weekly chart. You can see that you don't always get a successful head and shoulders setup, because that's the first thing that jumped out at me. This is going to be a negated head and shoulders setup, because here's your left shoulder, head, right shoulder. Here's your neckline. What did it do? It bounced off that neckline, and it began to break out. Now, you had KB Homes that came out earlier this week, had a horrible earnings report, and that put pressure on names like USG. I still like the stock, as long as it holds this breakout point. Yields are continuing lower, and even if yields continue higher, I think there's going to be a rush to lock in those interest rates that are evaporating, if and when that does happen. So I think that even in a rising interest rate environment, that you're going to have the home builders, you're going to have the suppliers, they're going to do well, because you're going to have that last spurt of building before the door closes and people can't afford houses anymore because rates are too high, and that's going to be a long way off. Let's face it. We can't afford in this economy to raise interest rates a quarter point, or else the stock market will go to hell in a handbasket. So I don't see rising yields anytime soon. So USG should do well. I like the weekly chart as long as we close above this breakout point. Great bullish key reversal last week. Let's take a look at a daily chart. All right, so here's your pullback. Sympathy with KB Homes. A nice reversal day today. 50-day moving average is rapidly approaching the 200-day moving average. I think that you have a good stock to buy. Inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's the neckline. It's struggling with that neckline to break and close above it, but I think that we will get there. Good double bottom setup. We had a low of 26.03 after a prior low of 24.53. Draw your trend line higher. No, this is not rocket science. We rallied off of 26.03, put in a high of 28.48, pulled back, put in a higher low, rallied through the pivot point, and if we come back down and retest that pivot point, that's a great buy point. I don't think we're going to get there, though, after this reversal day today. I think the door is closing to get in early on USG. PSA, public storage. Daily chart. We have had a parabolic move higher on PSA. What we need to see is a 50% retracement at a minimum, and then some bottoming action. This annotated line in blue, dotted line, represents approximately 50% retracement. That would be a good entry point. Longer term, the chart looks good on a weekly chart. It's in an uptrend. So PSA looks good as a long. CYBR. We have profited from CYBR of late, and I took a small loss the other day after we were stopped out on this breakdown. But of the two trades, we still have a net profit in CYBR on the year. I think the story with regard to internet security could not be better for 2015. And I think it's only going to get better because the politicians are going to ignore all the threats out there until an event really smacks them in the face and they decide that they need all the cybersecurity that they can get. CYBR, very well run company. And on the chart, you're seeing a double bottom setup, pardon the pun, two bullish key reversals off of support. I like CYBR, and we will be looking to open up a position soon on CYBR. I will be sending out an alert to members if and when we do make that trade. EXXI Energy weekly chart, RSI is at 16.95. What will we need to do? We need to identify a setup that provides us a good risk to reward and a well-defined exit point. Case in point, here we are, the week of, and this is a weekly chart if I didn't mention it, the week of December 15th, we found support at $2.35. We've rallied up to $3.68, nice little rally, pulled back, and we are now retesting that support level. This is the potential for a good double bottom setup. Now, if I were to get long, I would put a stop loss just below 2.35. We have a breakout on Ultimate Oscillator, so you have an oscillator leading price performance, which is good. ADX line, the signal line in black, is at very, very overbought levels, which is bullish for the stock. You have the red line in a downtrend, green line putting in higher lows. So I'm constructive on the stock. And if I were to get long again, all that really matters, folks, is where you're going to put your stop loss, right below 2.35, and then you get out. Let's take a look at a daily chart. Daily chart looks good. Another double bottom setup with a clear, defined exit point. So you have 2.35. We rallied up to 3.68, pulled back, a higher low. It looks like we're poised to rally after we had this bullish key reversal today. We did close off the highs. I'm a perfectionist when it comes to bullish key reversals, and this is not a perfect bullish key reversal. So a bullish day nonetheless, good up volume, higher lows in Ultimate Oscillator. I'm constructive on EXXI in the short term. I do not think it's investable just yet. Note the RSI, which while we were making lower lows, made lower lows. When we pulled back down to retest support, what did the RSI do? It held rock solid. Very, very firm and stubborn. That's what you want to see when you're looking to get long of a stock that's been so hammered to death. And that's it, folks. Again, if you're not currently a member, if you want to get these videos in the future, as well as my best stock pick and some free video lessons, just enter your email address. We hate spam too. You will not be spammed. And members, stay tuned for the Market Pulse Check video, and that'll be coming out shortly. Be well.